All right, hello guys, this is Yasir Khan, and today I have another question from one of my subscribers. And the question is, what should I invest in? Should I invest in stocks or should I invest in real estate? And I hope that this video will help you understand um, what the differences are between these two asset classes, and so you can make an informed decision as to what to invest in. Now, the first thing to understand is that there is nothing common between these two asset classes. So, whenever someone messages me and asks me if they should invest in one or the other, I really don't know how to answer that question because both of these asset classes are as different as day and night, okay? An ideal person who would invest in stocks is very different from an ideal person who invests in real estate, okay? Please understand that. Generally speaking, when I talk about stocks, I only talk about dividend paying stocks because I am against buying and selling of stocks. I am against anything that would make you a stock trader because you lose money that way and you increase your taxes when you keep trading stocks. So I'm only talking about dividend stocks, stocks where you buy and hold and they pay out dividends every month or every quarter or every year, depending on the company that you go with. Real estate, on the other hand, is investment real estate. Okay, we could also be talking about a property that you buy and live in, but you will see better tax advantages and you will see a better return on investment if it is your investment property, which means that someone else is sitting in there and paying you rent every single month, right? I personally love real estate. There are a couple of reasons for that. The first thing is that when I buy real estate, there's something tangible out there that people can use. It is not a piece of paper, it is an actual property that people are living in and paying me money for. Okay? With stocks, it is just a piece of paper saying that you own a very small part of a certain company. And to me, that's not a tangible asset as at all, right? The other thing is I am in Toronto, Canada, and here real estate is, I mean, a big part of Canada. Canada's economy is real estate. Okay, people from outside, when they immigrate to Canada, they bring their money and they buy properties over here, which means that property prices will keep going up at least for the short term. Okay, some people, even if they don't have the money, they have to live somewhere, so they rent out the properties, which means that there is very decent demand for real estate where I am located. And that's one of the reasons why I really, really like real estate. The third thing is that, sure, it's a hassle to find the right property and to buy it and then find a tenant and put the tenant in there and sign the lease agreement. But once you do that, then you don't have to worry at time for years to come because the tenant, generally speaking, will love the property so much that they will not even think about moving. So these are a couple of reasons why I love real estate, but I do understand that you might not be located in Canada, okay, or even the US. My videos are pretty much watched all over the world, so I have no idea where you are, and the real estate market could be totally different in your country or in your city compared to Canada and Toronto. So it really depends on the location as well. Now, should you invest in dividend stocks? Well, it depends. If you want to do a little bit of homework, a little bit of research, and you already have the money to put away so that you can get an increasing dividend every single year, and you don't really care about the stock price moving up or down, and you have a medium risk tolerance, which means that if the price falls by a little bit, you won't stay up and at night worrying about it, then yes, stocks are very, very good. The issue with stocks is that you cannot use leverage with stocks. Leverage is when you take on debt, when you borrow money and then you invest it. And that magnifies your returns, your income, or your losses. Okay, with real estate, I do that all the time. I pay 20% down, I get the bank to loan me 80% of the loan, and then I buy the property using both my money and the bank's money. And most of the profit goes to me because the bank doesn't really care. All they're doing is they want me to pay them interest on the loan that they have given to me. That's all they care about. What I am doing when I use the bank's money is I am amplifying, I'm increasing my gains because I'm using someone else's money for the most part to make money. Okay, and this is the ideal situation. If you understand how to use other people's money to make money, you will build wealth faster. With stocks, that is not the case because banks usually do not give out money for you to buy stocks no matter what you do. This is the same for Canada and in the US. I don't know what the case is in Pakistan and India, but as far as I know, no bank is ever going to give you money or lend you money to buy stocks. Real estate is a fundamental human need, and that's why they give you money for that, because the worst that can happen is, sure, you might lose money on the property, but someone's still going to want to live in there. It's a basic human need, and the bank can go after the property and kind of foreclose upon it if you're not able to pay back the loan. So there's a huge difference between investing in these two asset classes. Now, I personally feel because of leverage, because you can use other people's money in real estate, I feel that real estate is the way to go because it will keep going up in time, especially where I am living. And if I'm paying only 20% down and getting the bank to loan me the rest of the money, it means that I can increase my gains much faster. And that's why it works in my favor. I won't even talk about the tax advantages of investment in real estate because it gets really technical and it confuses people. But please understand that if you are in US and Canada, especially, the government will be very happy with you and they will allow you to legally pay zero in taxes if you know what you're doing, if you have an investment property or multiple investment properties. Okay, the government incentivizes this kind of stuff because they want you to invest into society and to give people housing at a cheaper cost. Okay, so yeah, I hope I was able to make some clarifications. There's nothing at all common between these two asset classes. I wish there was. It would make everything simpler for me to explain as well, but it really isn't. And I personally think that you should research both these asset classes before choosing one. And you should ideally invest in both of them because that's going to save you hassle, that's going to save you time and money, because over time, one of these asset classes might go down in value, but the other one might go up. So you're kind of diversified. You're not worrying about a single investment. Instead, you're looking at 5 or 10 different investments and saying, well, that's fine. 2 of them are down and I don't really care because 8 of them are up. Okay? So yeah, guys, I hope that answers the questions. Let me know if you have more questions. You can comment. You can let me know what you thought about the video. And yeah, I will make another one tomorrow. Okay? Thank you guys and take care.